Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down. It looks like S&P is down about 0.45%. I think the NASDAQ and the Russell 2000, they're slightly green. We got certain sectors got hit. We did see energy got hit. S&P, the banks. I think biotech was up quite a bit, and so overall it's a mixed day, but I think overall it's kind of a down day, not a whole lot, about 0.5%, but I think it seemed like it's a bigger down day just because we gapped up first. As you can see here, we gapped up first and then we started falling here. So let's try to figure out what we can expect this week here. So you can see market actually stayed above my short to mid-term moving edge and closed above it for the first time since when this thing was coming down here last week. You can see that my short-term moving average is falling. We talked about this on the weekend video, and then we got above it. We saw a big gap up this morning, and then it looks like markets started coming down pretty hard. A lot of times this happens when majority of players are kind of watching and then like start chasing, and you know how the market is, man. Market just like to punish those chasers. Regardless of that, that gap was fully filled, and we did see slow down when the gap got filled. It was near my short-term moving average and my mid-term. So you can see right here in that vicinity, right there on the 5th hour, right? So that 5th hour candle, right? That is Dragonfly Doji candle there, because the gap got filled and the short-term moving average is there, and also my mid-term moving average. It looks like we're gonna bounce in that vicinity. And a lot of times when the gap gets filled, it does act as support in a conventional means. However, the fact that we did slow down on the 5th hour and the market continued to tank on the 6th hour tells us there's a bit of pressure, selling pressure in today's move. It's a little bit more stronger than what we've been witnessing in the last couple of weeks. Because a lot of times when the gap gets filled, that level gets respected. But it looks like even though I don't know how much gap up that was. I wasn't looking in the morning. So let's see. It's about 0.6, 0.7% gap up. It's not a huge gap up. It's a decent size. And we just tanked, and then we continue to tank on the 6th hour there. And with that move, my short-term, mid-term moving average is now broken, and now the price is below my short to mid-term. So I wanna give it actually bearish in the micro term. Looking at this price section there, just today's price section, like this, and also for the fact that the gap was filled, and then we really didn't. I mean, if we would have seen the market close with this candle, right? Maybe even some kind of a 6th hour bullish candle, right? Like that. Above my short and mid-term moving average, I would have given it actually bullish sentiment today. Micro term and the short term, because we got the cultivation of higher high. I would have looked at this into as a higher low. So once my short to mid-term moving average was broken to the downside, and market just completely ignore that support area, the gap fill support, short-term moving average and the mid-term, and show strength to the downside. So I'm going to label this market bearish in the micro term, just looking at today's price action, maybe in the last 2 days. But looking at things more of a short term, I don't want to give it bearish yet. I want to be more neutral at this point. Neutral, right? neutral in the short term. I'm talking more about like this, looking at things short term, maybe a week or two, right? And it is neutral because why? The market hasn't really gone anywhere ever since we broken above this level here, 363 or so. Market has been actually just kind of going up and down, making moves sideways, right? That tells us that market is in a neutral mode in the short term, looking at the last couple of days or a couple of weeks. Looking at things more of a short to mid-term, right? Looking at this right here, we are above this pivot we talked about on the weekend video, right? And it's not like we haven't seen this kind of move before. We've seen something way more dramatic. This one, right? How much of a gap up was that from here to there? Can you imagine? That was a 3-4% gap up, right? On November 6th, November 9th, 3% gap up. And in the whole day, right? That thing started tanking, right? And came all the way back down. And I think a lot of people probably thought that was it. That was mother of all trap. We saw a big gap up. That was up 4%. I remember Russell 2000 and the banks. We're talking financial sector, right? XLF. They were up 10% that one day. And that was a day, November 9th, where we saw that 4% gap up on the S&P, and that thing just got evaporated in that whole hour or whole day. And I bet a lot of people thought that's it. That's that final push. This market literally cannot go any higher. And that's 350. It went to 370. What I'm getting at is do not react emotionally. Because every time when there's some kind of a shenanigans happening, this is definitely a shenanigan, right? Because we gapped up and tanked. And this is not like anything new. We've seen these kind of movement, and this is a market. Market do things like this. Like you said here, we've seen it here, we saw some here, we saw some here. I mean, just go back since March lows, right? 220 to 370. Whole lot of shenanigans. This is why it is very, very important you understand the longer term picture of this market here. So anyway, we've seen this market go up 4%, fill the gap, and then makes a move back up. So it goes up 0.6% in a pullback. You're going to start calling the top here. Not very prudent, right? So far, we're still above that rising pivot. So far, we're still dealing with my midterm moving average still rising, right? Direction of that moving average is more important than price getting near it or slightly getting below it. Not only that, we still have this gap, and this is going to be important pivot, right? So that's horizontal pivot, prior resistance, potentially acting as new support. So we have support level at here, rising pivot. We got the horizontal pivot, 363. And then we have that gap support at 362, right? And if we break all of that, we have another gap level at 360. So there are many gaps that bears have to go through, and all those levels going to act as support. So in looking at things more in the midterm, and now we're talking about a month or so of price action, I still want to give benefit of the doubt to the buyers because of these higher lows this market have been cultivating, right? And some higher highs here. So again, micro term bearish, just the sheer strength that we saw in today's price action, right? We saw that gap, but it broke right beneath that area, broke below my short to midterm moving average on the 6th hour, and because of that, I'm labeling it bearish in the micro term. In the short term of things is neutral. I'm talking this right here, the short term, last week or so. Market hasn't just gone anywhere, right? We've just been kind of moving sideways. So, and then obviously in the midterm, I'm giving it still bullish. Benefit of the doubt goes to buyers because we're still cultivating higher lows. And ever since this thing got up here, since early November, all of those pullbacks were met with bounce, if not next day, at least in the next several days, and became that higher low, right? Let's check out that oscillator and see what we can expect here. So oscillator is kind of that crucial level. We are hitting that resistance now after seeing that cross. The thing about it is that we didn't see a bullish divergence like this, because obviously that bullish divergence cross is more potent. This one really didn't give us that. So I think there's maybe it was a little bit weaker on this move, but we are just right on the resistance. So if bears really want to turn this into some kind of a short-term bearish downtrend, want to bring this back down, not just into this dotted line, but want to bring it all the way down to the oversold level. If we do see something like that, things may get hectic this entire week. But again, I've said this before, I'm going to say it again, you'd be surprised how quickly sentiments can change in the short to micro term, right? One day looks a whole lot bearish, it looks like everything's going to tank, and the next day everything's forgotten, right? Good example of that is this here, right? And here, right? When the market is down, it seems like everybody, the market is never going to go back up. When the market is up, it feels like markets will never come back down, right? So we have to understand that in the short to micro term, things going to change, sentiment is going to change very rapidly. Obviously, if you're a bull here, you want to see this level hold. You want to give it enough to that, give it some wiggle room here. I think, 363 to 360, I think is going to provide solid support, right? And if you're a bear, and if you're looking for the price to see further decline, right now, obviously that rising pivot is going to be a problem. See how the price is going to react in that level, just because it has such a good resume here. Because every time since early November, every time we hit that level, we did see this market making a move to the upside. And then the gap area here, we got this gap. So I'll come back for you. You guys enjoy your evening, and good luck trading tomorrow.